What if I told you you don't need to be rich to start investing in companies like Apple, Tesla, or Amazon? You can literally start with a small amount of money and still own a piece of these companies. In this video, I'm going to show you how to start investing in the US stock market from scratch in the simplest way possible. And stick with me until the end, because I'll also explain what you need to know about taxes. If this video helps you, make sure to like and subscribe. Let's get into it. All right. First, there are a few things you should know before you start. Number one, in the US stock market, there are no daily limits. A stock can go up a lot or drop a lot in a single day. That's completely normal. Number two, market hours. The US market opens at 9:30 a.m. and closes at 4 p.m. Eastern Time. And number three, if you make money, you'll need to report it and pay taxes. Don't worry, I'll keep that part simple later. Now, let's talk about how to actually get started. To invest, you'll need a brokerage app. Something like Robinhood or Charles Schwab works great for beginners. Once you create an account, the next step is simple. Deposit some money. After that, you're ready to invest. Now let's say you have $1,000 and you're just starting out. The biggest mistake beginners make is putting all their money into a single stock. Instead, here's a simple approach. Put around 70% into safer investments and use the remaining 30% to experiment with individual stocks. So where does that 70% go? Into index funds. Think of an index fund like a bundle of companies. Instead of betting on one company, you're spreading your risk across many. For example, the NASDAQ 100 fund. This includes companies like Apple, Microsoft, Amazon, and more. So when you invest in it, you're basically investing in all of them at once. It tends to grow over time, and it also pays small dividends throughout the year. Another solid option is the S&P Wink with tongue sticking out 500. This one includes the 500 largest companies in the US. Historically, it has returned around 10% annually over the long term. That's why it's one of the most popular choices for beginners. And the good thing is you don't need a lot of money. You can invest small amounts, even $50 or $100. A third option is the Russell 2000. This one focuses on smaller companies. That means it's a bit more risky, but it also has the potential to grow faster. So let's say you've invested 70% into funds like these. Now you've got 30% left. This is where you can start picking individual stocks. But here's the thing. This part requires a bit more attention. You should look at things like, is the company making money? Is it growing? Does it have a strong future? Right now, one of the biggest trends is artificial intelligence. For example, NVIDIA is a major player. A lot of big tech companies rely on their chips. Another one is Meta. They own platforms like Facebook, Instagram, and WhatsApp, and they're investing heavily in AI. And then there's Amazon. Not just e-commerce, but cloud services, streaming, and more. But just to be clear, these are not recommendations. They're just examples to help you understand how to think. Now, let's quickly talk about taxes. If you make a profit this year, you'll need to report it when you file your taxes next year. Most brokerage apps provide a summary of your gains, so you don't have to calculate everything yourself. You just take that information and enter it into your tax return. So to keep it simple, deposit your money. Don't put everything into one stock. Use index funds for stability. Use a smaller portion to try individual stocks. And don't forget about taxes. That's it. Simple as that. If this helped you, don't forget to like and subscribe. See you in the next video.